I think that the gold rig and the silver rig are collapsing, and along with that come much higher interest rates. And the higher rates are going to crash the housing market. They're going to crash the bond market, obviously, as interest rates vault higher, and it's going to crash the stock market.
Hey friends, thanks so much for tuning in. Sean from SGT Report here with an emergency update. You know, I had a cancellation today. My guest who was scheduled today, his father passed, so David Jensen was kind enough to step in and fill the void, and thank goodness, because I've wanted to reach back out to David for weeks to get his update on the gold repatriation and the very real possibility, guys, that we are entering a new Great Depression. Here is David's latest. Famine stalks the West as gold's price resets higher. Let me welcome the one, the only David Jensen. David, how are you, sir?
I'm well, Sean. Great to be with you again.
All right, my friend, here is your latest. We're going to get to it in just one moment. I want to share this headline from Zero Hedge. Could Mar-a-Lago Accord break the stock market? David, I just want to briefly share with you something that I wrote today, and it was this to a friend of mine. In my opinion, the international bankster cabal, which opposes Trump, and by the way, the AfD in Germany, want to crash the markets to teach the American people a lesson, as they did under Hoover. Resist and be destroyed. Can they be stopped? Will the American people understand what's happening, or will they return to the despotic demon rats in 2 years, hoping their portfolios will go back up? I'd love to hear your thoughts on this, David, because I have a lot of questions about what's coming. And by the way, I have some intel about dumb money. Intel and a source of mine in the precious metals industry. Dumb money selling. We'll get to that in just 1 minute. David, where would you like to begin?
Well, I think everything gravitates back to the London gold and silver market that was formed in its current incarnation back in 1987. And the Thatcher government had passed the Big Bang Financial Reform Act in '86, and after that, the bullion bankers basically structured the London market under the oversight of the Bank of England, who are the central bank currency printers there, and they created this market where they were trading promissory notes instead of trading actual bars of metal. And it's gotten so crazy since then that now, at the beginning of January, it's estimated there's about 400 million ounces of promises for immediate gold delivery, and 5 billion ounces of promissory notes for immediate silver delivery. So the whole system's gone totally out of whack, and gold and silver had a historic job of running when the central bankers were running loose currency policy. They were printing too much currency, and gold and silver would run as they did in the 1970s and basically force interest rates higher. So that warning signal was turned off in 1987, and since then we've had the biggest series of debt and asset bubbles in history, sequentially blown by the central banks. And that is now coming undone as there is a run on the London market that's underway. People are taking delivery. They're saying, well, thanks for the promissory note, but I think I'll take the bar. And that's what we're seeing right now is this repatriation of an estimated 28 million ounces of gold that have moved into New York from an estimated half of that has come out of London and has basically stuck a broom in the spokes of the entire London paper market. The market depends on people holding these promissory notes and being satisfied with them, and it's not structured for a large portion of them taking delivery of metals. So it looks like this 4-decade game is up, and now there's a scramble globally to position ourselves for the consequences of the unwind of the paper, gold, and silver market in the world's largest trading center there in London.
You and I have been talking about this for more than a decade. The paper
Yeah.
promises in London, and it's all being unwound. And there's nearly 30 million ounces of gold that have flooded back into the New York COMEX. Now, why
Yep.
is that? Why is it all coming back to New York? Is it because of Trump tariffs? And even if it is due to Trump tariffs or the threat of tariffs, why is the gold coming back to New York of all places?
Well, the narrative is it's Trump, but um, I haven't seen any direct evidence of that. It's very convenient to say Trump, 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 um, and it's quite satisfying for a lot of these commentators to say it. But it started at the beginning of December, quite gradually. Trump was not in power at the time, and it has ramped up now. We're expecting somewhere near 14 million ounces to have been yanked out of the London market, out of the London vaults. And that has basically totally jammed the system up. There's a 8 week delay now to get metal. And they say that's because people have to lease metal, have to borrow it to deliver it. But I mean, the lease function is a fallback position. If you don't have the metal, you try to borrow it. You still have to buy it at some time to close out the lease. But I think the key is that 14 million ounces probably by the end of March will flow into New York vaults. And that withdrawal of 14 million ounces out of the London vaults has been enough to basically jam the system up. And there's, if you say, well, there's 400 million ounces of claims, now there's a withdrawal of roughly 15 million ounces in round numbers. That still leaves 385 million ounces of paper claims that the world's seen what's happened here, and this is not dumb money. Well, you could argue that it's dumb on some levels, but it's not totally dumb. And people are going to be scratching their heads saying, well, if 15 or 14 million ounces did this, how the heck am I going to get my metal out of London? And then it becomes a question of, there's no sense in panicking unless you're first. And believe me, I'm reading every day about these refiners, the 60% of the world's refining capacity in Switzerland. Um, is in Switzerland, and they cannot get sufficient metal to deliver to market to meet demands. They're running 3 shifts a day, and they're saying that they're limited in terms of their output, in terms of inability to get sufficient metal. So it looks like the the rig is coming to a close. But the point we're at now, Sean, is there might only be a couple of million ounces of gold available to market in London to meet these 385 million ounces of estimated gold claims that exist in that paper market.
Are you ready for an interesting and I think amusing headline, David?
Hit me.
This from Zero Hedge. Listen to this now. As Bitcoin fades, gold sees huge ETF inflows, silver sentiment soars.
Hmm.
Let me read that again. Gold sees huge ETF inflows. Have they
Yeah.
learned nothing, David? Have these people learned nothing? You want to talk about dumb money, and we'll get to retail dumb money in a minute, but have they learned
Yeah.
nothing? ETFs?
Yeah, in a word, yes. They have learned nothing.
Well, tell people what it means for 10.45% borrow costs for GLD exchange traded fund shares, a 7% intraday surge. You wrote that very recently.
Yeah, so there's a global rush into physical metal, into bars, and um, everything else, everything else is a derivative, including ETFs. And so what you're doing is when you're holding an ETF, you're voting that you think that the system remains solvent, that the banks remain solvent, that the depository trust corporations that hold the share certificates for investors. David Rogers Webb came out with a great taking book. And 10 years, 12 years ago, actually 15 years ago, Patrick Byrne came out and warned of the exact same thing, that these depository trusts allow banks to step in ahead of shareholders in terms of property rights on the shares. So yeah, paper is no substitute for metal, and that includes shares held in the destabilized financial system. But it doesn't matter. There's the deep-pocketed, slow-moving money has recognized now the problem with London. And we're now seeing something called backwardation, where normally a futures price of metal is above that for the spot or the cash price. And today we're seeing the futures market has tipped into backwardation or near backwardation, with the cash price being above the near futures price. So and we'll see if this trend continues and see how deep this backwardation goes. But it's a signal that there's a panic for metal, and that people won't take the futures, or prefer not to take the futures. They just want the metal now. And I think that's going to accelerate, Sean.
Well, let me read you this. This is intel from a precious metals insider that I know, and I work with several companies. We are anticipating that this will be a down year across the industry. I know it seems quite strange considering the rise in gold and silver prices, but based on the info we have received from many wholesalers, they have never seen the volume of selling that we are currently experiencing. For the market to have some normal trends, we need buyers and sellers, and right now there are only sellers. David, I know we're near $3,000 an ounce on gold, but that has to be dumb retail money. Is it not? That's dumb money. I'm not selling my gold.
Retail market is completely asleep, Sean. They are completely asleep. They're bedazzled by crypto, which I view as the world's biggest round trip from zero to zero. And they're bedazzled by NVIDIA and the AI stocks, and, you know, thing after thing, shiny object after shiny object is distracting them. And so I think we can ignore the local coin shop coin market, and the 1 ounce bar market, and just see what's going on in Switzerland. And there we know that there's a premium on 1 kilogram gold bars, and that the refineries are unable to get sufficient metal to convert into this high grade kilo bar and 400-ounce bar format. So that's what the exchanges need, and they are not getting sufficient flow of metal to meet demand. So I would, the retail investor is always the last to know, right? They didn't get out of the 1929 crash ahead of time, whereas the deep pockets were out a year before, and they didn't get out of the 2008 crash, whereas the deep pockets got out before that crashed as well. So um, I think we've just got to focus on these institutional and very deep pocketed buyers who cannot get enough gold and silver right now, and they're distressing the refiners in Switzerland, who can't get adequate metal to meet demand.
Well, let me play this clip from Donald J. Trump sitting right next to Emmanuel Macron, a Rothschild agent. I say that literally. His wife is a man. Brigitte, have you guys seen the work of Candace Owens in this area and the whistleblower journalist out of France who almost lost his life for sharing the information? Macron is literally a groomed child puppet of Rothschild. And with little experience, he became a Rothschild banker. Here he is sitting next to President Donald J. Trump as Donald J. Trump mentions the gold audit to come of Fort Knox. Listen to this, guys.
We're actually going to Fort Knox to see if the gold is there, because maybe somebody stole the gold, tons of gold. So I think it was actually, there was a lot of genius in sending it. We're trying to find out if people are working. And so we're sending a letter to people. Please tell us what you did last week. If people don't respond, it's very possible that there is no such person, or they're not working.
All right, he's going on to talk about Doge, trying to figure out how many people in the U.S. federal government are actually people doing actual work. And the folks in Washington, D.C., the District of Columbia, that privately owned corporation masquerading as their government, are freaking out because they don't want their payola, their free money, to go away. But more importantly, he's talking about the Fort Knox gold audit and saying maybe the gold was stolen as he sits next to Rothschild agent Macron. I personally find that fascinating. What do you think they'll find in Fort Knox? Will the gold be there? Is it gold-plated tungsten? Or maybe the gold's all there, David? Does it matter? I think it matters.
Oh, I think it matters that you have this asset on your balance sheet to give confidence in your country's currency to some extent, as these fiat currencies come undone. I mean, there are three major repositories. There's Denver, there's Fort Knox, and there's West Point. where gold is held. And Ron Paul, Ron Paul has repeatedly pointed out that the last full audit of the Fort Knox gold repository actually happened in 1955. So that requires going through and noting every single bar that's in there and drilling them to and assaying them to ensure that the gold is of the correct grade. And Ron Paul has noted, he said that the last full audit, which takes months to do, um, actually happened back in 1955. And his point is, if the gold was there, they would have audited it by now, right? That's the only reason that you wouldn't do a full audit, to give the markets and the country comfort. So we'll see what happens. It's essential that you've got to audit all of the vaults at the same time. You can't audit one and then a few months later audit another, because it gives the appearance that there's potential that the audits are being front run and that the gold is being moved around. So we'll see what comes of it. But I think it's of lesser import than what's going on in London, because the wheels are coming off of this price setting mechanism. And as I mentioned there in that article, there's a potential here for famine as the gold price resets higher. And if you scroll down to the second figure there, you can see a 30-year chart. That's not a 2-year chart. That's a 30-year chart tracking agricultural commodities, soybeans, wheat, cattle, orange juice, corn, cotton, coffee, sugar, cocoa, and hogs. And it tracks the price of these things versus the price of gold. And there's a pretty tight correlation there. And as this London market rig comes unwound or unraveled, I think gold's going to reprice higher multiples. And the implication here is that the real assets, the food commodities especially, reprice multiples higher too. And people are already having a tough enough time paying for their groceries. And we know here in Canada, the food banks are being absolutely swamped in terms of people seeking food assistance and being in food poverty. So um, when you have a debt-based currency and you shut off gold and silver and blow the biggest debt bubble in history, it guarantees the debt collapse. And as a consequence, it guarantees the currency collapse along with it. And that is, currency collapse is what they call hyperinflation, where prices start to vault very high over a very short period of time. And it is of real concern here, what has been done.
Sorry for this quick interruption, and a quick word about a sponsor. Finding an honest doctor that's not following in the footsteps of big pharma can be pretty tricky. That's why millions of men and women have turned to one Texas doctor, and the 7 reasons he says anyone over the age of 50 should be drinking this. It's a unique protein that naturally declines with age and is proven to significantly increase bone strength and soothe joint pain. It minimizes wrinkles and cellulite, enhances hair follicle thickness, and even reverses nail damage. This Texas doc is offering SGT Report listeners up to 45% off his bone, joint, and ligament restoring formula at getnativepathcollagen.com/SGT. It has thousands of 5-star reviews. Every order comes with a 365-day money-back guarantee. So there is no risk to trying it today. SGT Report listeners can visit getnativepathcollagen.com/SGT to get up to 45% off while supplies last. The link is below.
It is of real concern here, what has been done.
Well, speaking of the Great Famine, as you allude to in your title, I just want to get back to my question that I posited earlier. The Great Depression of 1929 took place under Mr. Hoover. And I think that the powers that ought not be are suggesting that those who would dare defy them in support making America great again, or in the case of Germany with the AfD party, making Germany great again, well, abandon all hope, ye who enter, because the banksters will bring us to our knees. And they could crash the markets. In fact, I think maybe they are trying to crash the markets. Trying is a terrible word. They can do so whenever they'd like, I believe. And what do you make of that? What do you make of them crashing the markets to usher in another Great Depression under Donald J. Trump, to punish we the people for daring to try to make our nation great again and return the republic to the people?
Well, I think that the gold rig and the silver rig are collapsing, and along with that come much higher interest rates. And the higher rates are going to crash the housing market. They're going to crash the bond market, obviously, as interest rates vault higher, and it's going to crash the stock market, which depends on a lot of margin borrowing at record levels right now. People borrowing money to speculate on stocks, and as interest rates climb, the stocks start to collapse. And the whole thing, Sean, there's going to be very few assets that survive the burning down of the biggest debt bubble in history. And I think it is upon us. These things take time. It's not a 1 week thing or a 1 month thing, but we can certainly see the collapse of gold and silver, the control of it by issuing unlimited promises to deliver gold and silver is in collapse in London. And there is a run on. They've moved roughly 30 million. Some say twice that much has been moved to the US. We don't know because all we can see is the New York COMEX, or the Commodity Exchange vaults in New York. But there is a run to get gold and silver into the US. So I don't think, with the amount of silver that's being moved, looks like about 75 million ounces have been moved here in a couple of months into the COMEX vaults, and maybe twice that much into all vaults. But that doesn't look to me like it's an organized government program. I think it's probably many investors that are getting the heck out of the paper markets and securing real assets.
Well, forgive me, I missed this one. I haven't read it. What was the role of J. Aron and Company and Goldman Sachs in the gold market price suppression over past decades? I would throw J.P. Morgan in there as well, Deutsche Bank, maybe others, HSBC, those
Yeah.
that control the SLV and GLD ETFs. I named two of them, and it wasn't Goldman Sachs. What was this article about? Who is responsible for getting us to this point as we're ready to go off the cliff?
This is based on an extract of a book written by a former Rothschild banker named Ferdinand Lips. He left Rothschild Bank in 1987 and started his own Swiss bank, and then he wrote this book on the rigged gold and silver markets. And what he found through his connections in Switzerland in the 1980s and 90s was that J. Aron, which was bought by Goldman Sachs, were the principal advisors to the central banks. And they were advising the central banks to dump their gold in the 90s and to lease it into the market. And so it's pretty compelling when you got a bullion banker insider and a Swiss banker in contact with the actual insiders in the market. And so what you have is, between central banks dumping their gold holdings and then off-balance sheet leasing programs, there was three analysts in the late 90s. Frank Veneroso, who was an advisor to central banks, Reg Howe, who was a gold advocate, and James Turk. Most people have heard of James Turk. He started Gold Money. So those three analysts all followed Richard Pomboy, who warned us in the mid-90s, and they warned at the end of the 90s that the central banks appeared to be doing this off-balance sheet leasing of gold, which was roughly 1,500 tons a year. So you're looking at about 45 million ounces a year of gold that was being silently leased into the market. And so, the work that appears to have been done by J. Aron and Goldman was that they coordinated or encouraged the central banks to engage in these schemes, and that is what allowed this secular or long-term dropping of interest rates and the blowing of the debt bubbles and the blowing of the asset bubbles. And that certainly benefited the financial industry as a whole, because their game was to take a percentage of the trading profits in the market. And I do suspect that many of the industry insiders have been quietly converting their earnings into gold over many decades, as gold bottomed out at $250 an ounce in 1999 and now is 10 times higher than that, and heading, I think, much, much higher. So it's a very sad commentary, but I do encourage people to read the book. And I've also posted on my Substack a link to PDF of the book, The War on Gold by Ferdinand Lips, and essentially what he was seeing as an insider in the Swiss and London gold market at that time.
Well, David, I saw a clip earlier today from Andy Scheckman over at Miles Franklin. And by the way, that's not the guy who gave me the intel about all the dumb money selling.
Yeah,
And he was doing an interview with somebody. I can't find the clip now, but basically, I'll paraphrase. He was talking about the repricing of gold, the coming repricing of gold, and how that could happen. Who could reprice gold? Could Trump, could the Treasury reprice gold? Because he was saying something like for every $4,000 increase in the price of gold, it would create like $1 trillion for the U.S. Treasury. And I'm just curious about repricing gold. For the dumb money who's selling, that's the bottom line question. Where's this
yeah.
thing going? And by the way, for forgotten silver, oh my God, can you give me a break about silver? If I'd ever just put any of that money into Apple stock, do you know how wealthy I'd be compared to licking my wounds for still owning silver at 32 bucks since 2007? I'm sorry, it's a fly in the ointment, but gold, repricing, silver, where's it going for the
The
dumb
game,
money
well,
who's selling?
the game isn't over, Sean. So you're midstream here. But I think what you're going to see is that these digital assets in digital financial accounts are going to become distressed as loss of gold and silver occurs, loss of control of gold and silver occurs in London. And then as a consequence, that heavy selling of bonds occurs and interest rates go much higher. We're going to have currency distress. We're going to have bank distress. We're going to have financial market distress. And that's when the lifeboats of gold and silver shine. So don't be angry that your lifeboat isn't worth more than what it was when you bought it. Uh, I think the key is to have the lifeboat and to be prepared for what is coming.
Alrighty. Could you put a finer price on it, though, for gold in particular? I mean, given all of the fiat that's been printed, despite Doge's attempts to rein in spending and government malfeasance, where do you think gold could be headed? Again, for those who are eager to sell just below
Yeah,
3,000, the dumb
right.
money.
Well, so I think the key is that we are in a fiat money regime which is collapsing, and there's not really much use in putting a fiat money tag on it. Because what happens in these crises is that fiat money, fiat currency, pardon me, is rejected. And then it becomes an issue of whether or not you have real money, which is gold and silver, which has intrinsic value. Um, do you actually have real money that allows you to purchase essential goods that you need? So that's the key point here. That's the lifeboat aspect or the safe haven aspect of gold and silver, physical metal, is that it becomes an essential asset to have when you have destabilized fiat currency.
What do you think about the possibility of Trump doing what JFK did? Get rid of the Fed, reintroduce a backed currency of our own printed by the Treasury and not issued by the Federal Reserve at 6% interest.
Well, here's what I think. I think Trump is riding a tiger. I don't think he's a conservative, and he's trying to ride this populist movement. And I don't know if he's going to succeed or not, but I think the tiger can turn on him and eat him in the middle of all this. So I really don't know, Sean, what's going to happen. All I know is that me looking at the future says there's tremendous, tremendous uncertainty, and we do not know what the future holds other than chaos. So it's going to show itself with time, man. Maybe you'll be with me in northern British Columbia someday. Who knows?
Yeah, maybe.
But transportable, gold and silver are valued in every country. Eskimos, headhunters in New Guinea, people in South America, Africa, everywhere, gold and silver are accepted. And they've got a 4,000-year history as money in crisis. Crypto doesn't, especially when the web starts getting disrupted. As I think that the global banksters need us to stop being mobile and they need to stop us communicating. So I think every effort be made to jam this stuff up. And I think at that point, it's going to be when trust is lost, people aren't going to be willing to say, oh, you've got some special digits. Oh, I'll take some of those special digits. Life becomes very elemental, very, very basic, right? Food, energy, transportation, intrinsic money with a 4,000-year history is trusted. Everything else is a promotion.
Since 1987, when the Bank of England, Britain's central bank, started the London Bullion Market Association, the LBMA guys, and started supervising London's gold and silver markets, gold and silver have stopped responding to monetary inflation by central banks. At the center is London's, the globally dominant physical gold and silver market, creation of promissory note trading of gold and silver. Essentially, guys, making gold and silver virtual assets, paper gold and silver. To set the daily price of gold and silver, each day London traded 2.5 times to 3 times annual gold and silver mine production. Let that sink in. The number you're seeing today for silver and gold is a manipulated number, and it's going far, far higher, in my opinion. David, I'll give you the final word. Thank you so much for filling in today and coming on in short notice.
My pleasure. Final word, watch the refiners in Switzerland. They are distressed. And it's a signal that people are starting to go around the markets and going directly to the refiners, trying to secure and source as much physical gold and silver bars as they can. And the run on the London market, it's all being promoted or put forth as a Trump issue, and that all the gold's, I've heard these commentators from London saying that all the gold's going to come back to London once the panic's over. And that's the narrative that they're selling. But I think what we're really seeing here is a realization of a subset of gold and silver investors, which are a tiny, tiny fraction of the financial markets, recognizing that the London gold and silver markets are fraudulent and that what they're holding are promissory notes. And what we can see is with a tiny fraction of the open claims on gold and silver in London being withdrawn, that the market has essentially seized up. So eventually this is going to wash through the markets with much higher prices. There is going to be a retail run. The retail investors are always late to the game. And it's actually a good sign that the run that we're seeing in prices of gold and silver have started with zero participation by retail investors, because it means that it's not driven by hype and euphoria. There's something fundamental at play here, and I think it's the end of the gold and silver price setting system in London.
The big rig, guys, the big rig. Got physical? Our guest has been David Jensen. I will leave the Substack below. David, thank you, sir.
Thank you for your time, Sean.
Thank you for your time. Always a pleasure, my friend. Thank you for your time. We appreciate you very much. Friends, if you're still with us, thank you. I'll remind you every single day for free, we do the best we can to bring you the real news, the antidote to corporate propaganda and all of those CIA, Mockingbird, mainstream media lies 24/7 at sgtreport.com. The links are below. God bless you and yours, friends. Bye-bye.
This technology, and my husband gets bugged when I say this because I'm not declaring it, but it is the type of technology that could make a Malaysian 777 flight disappear. And then the Financial Times story came out, and frankly, Rick and I thought naively, this is fantastic. Now our government will take over. They will investigate our son's murder. They will bring justice to our son. Boy, were we wrong.